Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now. You're watching this on ET Now, of course. My name is Alex Matthew and with me is Cheryl D'Souza. Well, we had a reasonably good start to the trading session today. Remember, today is weekly expiry as well, so we're bound to see more volatility than we are usually used to. But as of now, we have the Nifty 50 that's just about given up its gains from earlier in the morning, trading with gains of just about 0.2%. Of course, it's depending that positive zone. It's a reasonably good handover from the Asian peers as well. But of course, the overhang of COVID-19 cases continues to loom large. You have over 4 lakh cases having been reported in the 24 hours to 8 a.m. this morning, and that's definitely going to be a cause for concern. Among the sectors that are doing well, definitely metals continues to be the pack to watch out for. It was gaining over 2% at one point. Tata Steel having reported really strong numbers for the fourth quarter as expected. So JSW Steel, Tata Steel all doing reasonably well in trade. Of course, cooled off from the record that it hit earlier today. I'm talking about Tata Steel. Among the others, you have the Nifty Bank that was trading flat but now is down about 0.3%. Auto is looking reasonably good with the two-wheeler manufacturers, Bajaj Auto as well as Hero MotoCorp looking quite strong in trade today. IT is gaining about 0.5% or thereabouts, and that's more or less how we're looking. Broader markets, of course, earlier in the day had higher gains, but as of now, just about keeping pace with the benchmarks. We're treading water at this point. I'll call it that. Cheryl?
Alex, like you said, that how the markets have actually given up their opening gains, and talking about Tata Steel also hit record high levels, but is off those levels. But definitely that's the counter that's actually moving the entire metal pack, and this is on back of strong Q4 earnings. So that is one stock that is in focus in our BNSN stock cloud of the day. But apart from that, you have Cipla. That is the other counter that is in focus. Has seen the biggest intraday percentage gain since April 16. India has given emergency use approval for a COVID-19 antibody drug cocktail developed by Roche and Regeneron, for which Cipla would be the local distribution partner. So on back of that, you have Cipla that is gaining in trade. Blue Dart Express on back of stellar earnings is buzzing in trade. Consolidated EBITDA margin improved to 25.6% versus 12.7% year-on-year basis. This is on back of better realization and cost efficiencies. And talking about earnings, you also have Deepak Nitrite that has posted good set of earnings, that their margins also come in much higher on a year-on-year basis. Apart from that, IDBI Bank is in focus, surging in trade. Cabinet Committee of Economic Affairs has given in principle approval for the strategic divestment and transfer of management control of the banks. On back of that, you have IDBI Bank also that is buzzing. Hero MotoCorp, Tata Consumer in focus on back of earnings today. Apart from that, you also have Angel Broking and Adani Green that are a buzz on back of their earnings. So these are the stocks that are in focus today and have find a mention in BNSN stock cloud of the day. But the talking point today definitely is the pharma pack. Remember, yesterday we saw stellar gains coming in the pharma, the entire pharma sector, more so on Lupin. That particular counter was on fire. But what is actually aiding the up move in the pharma sector? Pankaj is here to take us through the key highlights. Pankaj?
Well, let's talk about the pharma sector. Pharma sector is something which has been buzzing in the last couple of days. This is led by the generic business. So whether it's a Sun Pharma or Lupin or Aurobindo Pharma, all have been buzzing in. Now, when we talk about the space, you can see that there is a news flow of revival in Obamacare in the US. This would actually be positive as far as volumes of US generic players are concerned. This was being stopped by the Trump administration, but the Biden administration is reconsidering it. Of course, the COVID wave is not a hiding factor from anyone, not only here in India, but even globally. There seems to be a shortage as far as the drugs of COVID is concerned, and some of these COVID play, a lot of companies have similar or different kind of drugs. That is something, even though they would be in oversupply as production has been ramped up for them, still for a long time, they would be a part of the earnings. Rupee depreciation will of course enhance the numbers. FDA inspections did not happen in the last 1 year. Now with the second wave coming in so sharply, again the street estimates that FDA inspections will not happen. So any major downgrade or upgrade to the facility may not continue. India business, India branded business continues to do well. All these stocks have done quite well, led by Lupin, Aurobindo, Sun Pharma, Cadila, which were buzzing for the last couple of days.
Thanks so much for that update, Pankaj. So, quite a few factors to discuss with regard to pharmaceutical companies, but we will restrict ourselves to a couple of counters. One, Lupin, which did tremendously well for itself on the back of very high volumes yesterday. And the other was perhaps one of the only laggards in the space. We're talking about Alembic Pharmaceuticals, which is down as of today as well, down about 0.6% as we speak. Let me introduce our guests today. We've got Kunal Bothra as well as Ashish Kapoor, the CEO of Invest Shop India. Thank you so much to the both of you and good morning to you. I want to start, Kunal, with you. The two counters that we've chosen today, one is looking tremendously buoyant, perhaps one of the best performers yesterday. How do you rate Lupin from here on out, and what are the kind of weakness that you're seeing? Do you see it persisting for Alembic Pharma? Of course, it was on the back of earnings, and we'll get Ashish's view on that counter.
So good morning, Alex. Two different stocks and two different kind of chart patterns which are being visible for both of them. So Lupin on one hand, I think has given a very strong and a solid breakout of this multiple resistance. So as you can see on the charts, this 1100, 1120 zone was a huge resistance for Lupin since last 7-8 months. I think from August or September 2020, the stock was just about taking resistance, but every time the stock used to take resistance, it used to make a higher bottom. So these are classical patterns which we look out for, and it's very difficult to preempt what time the breakout would happen, but then a breakout seems to get imminent. So post that breakout, we've now seen Lupin moving up higher by 10% from those breakout levels to 1200, 1220. I believe now the next level of targets for Lupin should be almost at 1300 plus levels over the near term. So I think from a positional play, Lupin can still be bought on every kind of dips the stock offers, at least on the short term, for 1300 kind of targets. Alembic Pharma, on the other hand, I think is a different chart altogether. The stock is more in a range. You look at the stock, there is hardly any pickup in volumes as well. So if you can check on the lower grid as well, there's hardly any major pickup on volumes for Alembic Pharma, which is why the stock is not being able to convert any short-term rallies into significant amount of trends for itself, like what it did in the first half of, or in the mid half of 2020, when it recovered from the March 2020 lows. So I think because of that, the stock is in a range. As a pure investment play, I think if someone is looking to buy Alembic Pharma, then I think if the stock comes back to the lower end of the range, which I've marked up with a shaded region, I think that could be a good risk reward buy, specifically if the time frame is long term.
All right, that's Kunal's view coming on both on Lupin as well as Alembic, saying that the stock, as you can see, Alembic Pharma is looking more range bound, whereas Lupin you can look to buy on every dip. Ashish, good morning. Cheryl also joining in. Wanted your view on Alembic Pharma, particularly considering that they came out with their earnings. They've actually cut their US guidance. Do you see that weighing heavy on the stock going ahead as well, or otherwise fundamentally it's all fine, you can ignore this particular guidance cut coming in from the company then?
Well, I think to begin with, I think both these stocks had kind of underperformed the in general. Lupin with this massive rally yesterday has caught up to a large extent. Going forward, a little different view. I think Lupin has already run up, at least from the fundamental point of view. At best, a hold at this level. Whereas Alembic, I have a buy rating now. To explain the thing, I think Lupin, we are not expecting too much of revenue growth. I think with this run-up, it's kind of fairly valued. The EBITDA margins certainly are improving, and of course, nothing taking away from the fact that Lupin itself is a very large, diversified company with a very good presence across diabetic, cardiac, and respiratory segments. And with the COVID, also nebulizer use is going up. Their product albuterol is again in demand, and I think they're likely to improve their sales here. But having after the run-up, at best a hold, perhaps on a decline one can look at adding. Whereas Alembic Pharma, I think the US weakness, you rightly said, the Sartans portfolio hasn't done well, and that has brought the stock down. But to my mind, this is a good buying opportunity, because otherwise the company is doing very well. Their API segment is very strong, and ex-US generics business also is doing very well. The company has a very high EBITDA margin of 26, more than 26%, and also a very good return on equity of more than 25%. So they're very good return ratios, and company otherwise doing very well. I think this bad news is, in my opinion, an opportunity to get into this stock. So I have a buy rating on Alembic, where the target would be at about 20-25% higher from here, and a hold rating on Lupin.
Okay, fantastic. So we've covered those two counters, but Ashish, I do want you to just very quickly in a couple of minutes give us a sense of what the factors are. Now, Pankaj laid them out. He said that Obamacare is one factor. You have US FDA inspections that are unlikely to come in very quickly. But clearly, there's also going to be pricing pressure in the US markets, right? It's something that they've been moving towards, curbing the prices of generics in that market. So where do you see pharma moving from here, and which are your picks? You said that you have a buy call on Alembic. I get that. But besides that?
Well, I think pharma sector, lately the rally has been very good, and I don't see any great opportunities here to buy, frankly. I think the one, well, besides Alembic, which other one which looks good is Dr. Reddy's, because that also is a play on the vaccine front, and also hasn't done too well in the last few months. Apart from that, I think as a sector as a whole, I think being defensive and being the healthcare, COVID-related fears, all have kind of played out. It's at best going to be a kind of moving in tandem with the market. I don't see it outperforming from here. Also, really speaking, I think all the factors benefiting this sector are very well known, have been known for some time. We all agree that healthcare will be in focus, that all these things would be in demand. But to my mind, broadly, this is not a sector where you want to increase your weightage now. And like I said, I think the two picks which come to my mind are Dr. Reddy's and Alembic Pharma. That's it.
All right, point taken. So that is the expert's view coming in on the pharma space, particularly on Lupin as well as Alembic. Well, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned. When we come back, we'll come back with the high risk and low risk ideas from experts, as well as resolve all your viewer queries. So don't go anywhere. Stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, and time for the high risk and low risk ideas from our experts. So first, starting with Kunal. Kunal, what are your ideas for viewers today?
Well, I'll suggest a couple of buy calls, and one of them is a slightly high risk trade. It's a buy on BHEL. Given this call in the morning show as well, that the stock is now inching towards a breakout. I'm more heading towards a triangular pattern breakout, as well as a big falling trendline breakout on the monthly charts for itself. So this could be a strong turnaround candidate from current levels. Buy with an immediate target of 66, and stoppers could be kept at approximately 55 levels. The second stock which I would suggest is a buy on Wipro. Slightly low risk in terms of the way the stock tends to move up. It goes into very strong periods of uptrend. So even at current levels, you're seeing the Nifty IT index somehow outperforming. Mid-cap names, of course, are doing much better. I think Wipro as well looks quite stable on the charts, heading towards a breakout yet again of that 500 psychological mark, which I believe could lead towards at least a 25 rupee upside from current levels. So buy with a target of 525. Stop loss could be kept at 480.
All right, Ashish, coming to you on your high risk and low risk ideas. What are they?
Well, I start with the high risk. I think commodities are generally on fire these days, and I think one commodity which is doing well and likely to continue doing well, according to me, is sugar. Now, when it comes to sugar, normally you think of Balrampur Chini, then followed by Dhampur, Triveni, etc. The one stock which I have in mind normally is not on the radar because A, low volume, and secondly, I think for whatever reason, no interest, because the management is very conservative and plays out in a very soft way. EID Perry, in fact, is one of the 5 largest players of sugar. So therefore, I think it is still underperforming compared to the rest of the sector, mainly because of the reasons like I told you, very conservative management and very low trading volume. The company actually is very safe because the management has a very excellent track record of investor protection and investor welfare. The other thing which is going for this company is that besides sugar, they also have a presence which is of course small compared to the overall volume in the nutraceuticals business, where they make various immunity boosters, and with the kind of environment we are in, that is a segment which is obviously getting a lot of traction. The third very important trigger here is that they have a stake of 56% Coromandel International. Again, a commodity player in fertilizers, doing very well, very good presence in the phosphatic fertilizer space. The company, Coromandel itself, is likely to do very well, so that the stake itself, the valuation is likely to go up higher. Now, on a very conservative basis, if you were to value EID Perry, the price would come to 690 rupees. And from the current level, it is still a very significant upside. Again, like I reiterate, it's a very safe, well-managed company, very conservative group. To my mind, the safest stock, if you have missed out the sugar rally so far, the safest stock to get into, and with a very good upside. The risk, of course, is if by chance the sugar sector cycle, which is, according to me, in a very strong mode, if for whatever reason, if this cycle turns and ends prematurely, then of course all sugar stocks will fall, and this one will also head southwards. But that is a remote possibility, so this is a very good stock picking idea. On the conservative and very safe side, I have a pick on Exide. Now, Exide, when it comes to battery, is the first name which we recall. It has a 60% market share of the overall battery space, which includes auto as well as industrial batteries. They have a more than 85% stake in the batteries of two-wheelers, which is a fast-growing segment. The company is likely to improve margins going forward, as they have gone into the telecom battery space where the margins are better. Also, what is really likely to continue favoring the company is their early mover advantage of going into lithium battery production. They have gone into all the three types of lithium batteries: cylindrical, prismatic, as well as pouch. They have already started production in a limited way in the prismatic space. And that is something which will keep helping them in years to come, because I think the EV business is likely to be really focused on the battery space, and getting the early mover advantage is really going to help this company. The company has very good return ratios, and I think here the target on a very conservative basis is 280. Which represents a 50% upside from the current levels. And according to me, the risk is very low because auto sales are anyway doing well, so batteries sales should be up.
Right, Ashish, point taken. We request you to keep your answers a little short when we go into the query segment, since we aim to take a lot of queries from our viewers. All of them are pouring in on YouTube as well as email and Twitter as well. So let me first start the query segment with an email query, and this one is coming in from Rupak. He's talking about Vedanta, wants to know what was the view on the stock. He's bought about 100 shares at 230 rupees per share. He wants to know what sort of target can he aim for the next 3 months. Kunal, what's your view coming in on Vedanta?
So it looks quite attractive. I think from a very short-term view, another couple of months, assuming the metal cycle remains intact and you see the metal stocks just about floating in a positive trajectory, at least in terms of the global asset class, then I believe a possibility of at least a 275 to 285 for Vedanta could be a very near-term possibility. But if the move gets extended for many of these metal names, there could be a possibility that even 330 is a likely target for Vedanta. So you can take it step by step. Maybe look at 275, 280 as the first hurdle. If the stock manages to cross that, then keep that as a trading stop loss, and then aim for higher targets of 330 approximately.
All right, coming back to you on this next one, Kunal, and just a quick reminder to both of you to keep your answers as short as possible. But of course, I'm not asking you to not give your rationale for why you're asking the investor to do something. Danny Verghese has got a question on Aarti Drugs, Kunal. This is a short-term query. He's bought at levels of 695. He says that there's a rally in pharma stocks, which we did mark on the program today. Would you sell at this juncture, though?
I think it's been one of the best performing stocks, from the March 2020 lows. I think it was at 120, 130 rupees, and from there it's moved up to almost, touching the 1,000 mark. consolidated for last 6-7 months. So it's going through that classical rally and then a time correction. I think if you've bought at lower levels, then I think you should stay intact over here. There is a strong possibility that once the uptrend begins for Aarti Drugs, the stock should scale past about the 1,000 level. So the question is if, or rather the question is when, will the stock come back and restart its uptrend? So if you're a patient investor and if you've held on for quite some time, then I think you should continue to hold on Aarti Drugs.
All right, our next query is an email query coming in from Sethu Ramalingam from Chennai saying that he is holding 55 Grindwell Norton shares at 435 rupees per share. He wants to know what's the future prospects. Can he continue to hold on for the long term? Ashish, what's your view on this particular counter?
Well, I haven't really tracked it for a long period of time, so I wouldn't like to comment on it.
Kunal, would you like to take this one though? How are the charts looking for Grindwell Norton?
These are classical stocks, Cheryl, which are buy and hold kind of stocks, because these stocks, they tend to unleash their potential more on the longer term. They are not good I would say stocks to really trade very, very actively, because they tend to go into more of silent periods of consolidation. Again, one of the catch which I've been highlighting time and again in many of the shows as well, that these are very illiquid kind of stocks, because the trading volume, they tend to just about be in few thousands at some odd days. So you have to be very careful of those kind of illiquid charts. But it looks very attractive on long term basis, provided if you are from a longer term investor, then I believe buy and hold or buy on dips could be a good strategy for Grindwell Norton.
Okay, fair enough. The next question is from Shubh Mathur actually, and he's holding Exide, which Ashish actually suggested as one of his ideas. He's asking whether he should average. He's bought at levels of 214. Ashish, should he average at this point? You've already given your justification for holding the stock.
Certainly go ahead and average. I think, like I mentioned, I think this is a very good stock. According to me, very safe also, because I don't see why it will not do well going forward. And 280, like I mentioned, is a very conservative 1 year target. So with that's a significant upside from the current levels.
All right, our next query is coming from Show Me Day, saying that is it a good time to invest in SAIL at 128 rupees per share odd levels for about a 20% gain in the short term? Kunal, how are the charts looking for SAIL? Is the prospect of 20% gain in the short term can be aimed at, given that you've seen these counters actually run up quite a bit already?
Absolutely, Cheryl. So it's very difficult to expect that what has happened in the last 2 months, particularly 1.5 months, not even 2 months for stock like SAIL, I think would probably happen in the very near term as well, because these stocks, they tend to go through sharp periods of correction. It's already rallied from 70-75 levels to 130, so more than 50% return in just a matter of 1.5 or 2 months for SAIL. So difficult to say that whether the stock has capacity to move up very, very high or significantly high in very, very short term. If you can broaden your time horizon to long term and then use more of a buy on dips approach, then it makes sense to hold on to something like SAIL. And I think use those odd periods of correction if it comes along to other metal stocks as well, like Tata Steel or JSW Steel. So make a basket of portfolio from the metal pack and then have a longer term view. I think that's a much more prudent strategy rather than looking at it as pure short term trading bet.
Okay, coming back to you on this one, Ashish, another question from the battery space. Sarvanan has got a question. With almost a 30% fall from its peak, does Amara Raja batteries also have growth opportunities? Can one start fresh investments now?
Well, I would say yes, though like I mentioned, I think Exide would be my choice. But even Amaraja, the lot of negativity around there. They also have some some issues with the local authorities in their plant in Andhra Pradesh. But I think they are all temporary things. So otherwise, Amaraja, yes, is again a very strong player, has very good margins because they have a very good presence in the telecom battery space. So I would, yes, agree that the current weakness is a good opportunity to buy.
Viewer query is a YouTube query coming in from Anjali Sharma saying that is it worth buying Adani Power at 98 rupees per share and Clarion Chemicals at 420 rupees per share. Kunal, what's your view coming on these counters? Worth a buy at these levels?
Well, Adani group of stocks are very risky, so that's the biggest catch because they tend to move up into very high periods of uptrend, very high periods where you see returns being generated in multifolds rather than just about few percentage points. But then when these stocks they go through their corrective phases, the correction is also very, very sharp. For example, Adani Power, I think if I'm not wrong, in the month of February or March, the stock had come back to 106, 107. And in just a matter of 3 or 4 days, 4-5 days approximately, it had come back to levels of 80. So, it's a very sharp correction when you see stocks falling by 20-25% in just a matter of 4-5 days. So that's the biggest catch and caveat for these names. I think if you want to shift to some other, stable stock from the Adani group, then I would advise that you look at, something like Adani Ports, even at current levels. I think that stock looks fairly attractive, given the time frame and given the kind of stability the stock has shown over the last few months.
Okay. All right, let's move on then. We've got a question on a couple of interesting sectors. In that, we've got Sahil who's asking about airlines and hotels. Ashish, would you like to weigh in on this one? These are actually sectors that are not doing particularly well on account of the second wave of the pandemic. But would you have any picks for the medium to long term?
Well, I think if you have a longish view, the stock which comes to my mind is Indian Hotels. Again, it has also moved up and has corrected a bit, but at lower levels, Indian Hotels looks a very interesting compounder over the next few years. So if you really get Indian Hotels or start averaging and use every dip to kind of build a position in Indian Hotels, then according to me, I think in a few years, you could be getting a very good return from here. The stock actually had reached a level of about 65, 67 last year when the pandemic started. That was, of course, a great buying opportunity. It is not, it is much higher than that. But I think as news of more lockdowns kick in, it could perhaps head lower. But at lower levels, I think this would be a very good stock to build in a staggered way. And like I said, use every decline to buy in a staggered way. And this over the next 4-5 years could be a real good multi-bagger kind of a story, because I think the company is doing very well. The model is very interesting because now they're expanding using less capital, using the Vivanta route, franchisee route. So I think this is what I'm very bullish on. This is one stock which I really like. As far as airlines are concerned, I think generally an avoid, because despite the prices of some shares like Indigo going up, I don't see any reason to be bullish because pricing pressures are going to be immense. As it is, because of COVID, there are a lot of restrictions, a lot of additional costs which they have to incur. Plus, with the fuel prices going up, that would be another additional pressure. So, airline stock certainly an avoid at this juncture. But in hotels, I have one pick, which is Indian Hotels. That also, in a staggered way, use declines to buy.
All right, next query is from Sumit Kumar. He wants to know whether he should go ahead and look to invest in Newland Labs or Amrutanjan. Kunal, what's your view on the stocks? So what should Sumit do?
So Newland Labs could be a good buy and hold kind of an stock. It is very difficult because the stock has hardly given any major periods of correction. I think over the last 2 months, it's not even tested its 50-day moving average, I think, if I'm not wrong. So that itself tells you that the stock is not prone to too much of volatility. It's more of a stable stock, and such kind of stocks, they generally take a lot of time to move up higher, but when they do, they tend to go into strong periods of uptrend. Amrutanjan as well, I think, is a very similar stock. It's done phenomenally well over the last, I think, 6-7 years. Rising up from those 2-digit levels to currently at 600 plus, where it's trading. So again, a very similar kind of a story where you might have to buy and hold from a longer term to try and get a consistent returns on both of these names.
All right, coming back to you on this next one, Kunal, we've got Parth who's asking about HDFC Bank, and I think over the past couple of weeks there have been bouts of weakness on this chart, haven't there? What's your recommendation? He's asking if he should accumulate at current levels.
Well, you can accumulate, but I think a better way to do is, so if it's specific towards short term, I'm assuming, then you have to understand that HDFC Bank has been an underperformer as compared to the other private sector banks. So even if you do a comparative analysis of HDFC Bank as compared to maybe an ICICI Bank or Kotak Bank or Axis or IndusInd Bank, and in the last couple of weeks, the stock has grossly underperformed. And I think that's the bigger worry for stocks, because when you're trying to buy stocks, specifically from a short term to, I would say more of a momentum play, then you need to buy stocks which are in high momentum, which are outperformers as compared to their peers rather than underperformers. So I think in that aspect, maybe HDFC Bank could not be a good short term buy. But yes, from a long term portfolio wise, the way the stock has gone through a corrective phase, 20% from its 2 month, 3 month highs, I think then it becomes a good starting point for you to accumulate at current levels. So if your time frame is long term, then you can start accumulating at current levels. Short term wise, I would suggest an avoid, at least as of now.
Also, you have Manas Gore who's asking for a target for Laurus Lab for the next 6 to 12 months. How is this particular stock chart placed currently, Kunal?
Well, I think very precarious, Cheryl, because the stock has just about run up significantly higher. I think if I'm not wrong, the YTD returns are more than 36, 37%. And the last year returns, for Laurus Lab is more than 3.5x or 4x approximately. So after such a kind of an uptick, it becomes very difficult to initiate a fresh buy for Laurus Labs. I would suggest that if you've already bought at lower levels and if you're holding on, either you have a trailing stop loss mechanism or you should look to book out at least 50% or more profits on your holdings on Laurus Labs.
Hey Kunal, I'm just checking something. Do you have a view on gold? Do you also chart gold prices?
Well, I do, Alex. In fact, a month and a half back, I think end of March or start of April, I had given a bullish call on gold on the channel itself, on the Chartbuster segment, explaining that why gold at 43,500, 44,000 on the INR terms could probably be in for at least a 10 to 15% upside in the near term. So, the asset class was going through a corrective phase for the 2 quarters back. I think from December 2020 or I think a month prior to that, the asset class started to top out and went through a corrective phase. But now I think that it somehow found a bottom at 43,500, 44,000 levels on the INR term. So I think that's a good level to accumulate, specifically from a medium term to long term view. And I believe as an asset class, it should start trending up higher again. 47,000 I think is where it's currently trading on INR terms. I believe over the next 6 months to 1 year, it should try and touch back towards 50K plus.
Okay, great that you had that view. In fact, this was a question from Indumati asking for the very near-term view on gold. And that, I think, answers the question. We've got a question from Pranav Dangi on Heritage Food. And this I'm going to take to Ashish. Ashish, a long-term view, he's already invested at levels of 285.
Yeah, I think Heritage Foods would be a good idea to stay invested in. And I think if he's asking for fresh buying, yes, again, I would say the stock looks very good and very interesting from a long-term perspective, and a very good growth sector, and the company itself is doing very well. So I don't see any reason to worry. I think you stay invested and use any declines to add more.
Next query is coming from Ritesh Sharma saying that he's bought Jindal Saw 100 shares at 90 rupees per share. He wants to know whether he should continue to hold on to the counter or should he go ahead and exit it. Kunal, what's your view coming in on Jindal Saw?
I think you can hold on to it. It's a very, very high beta stock. But whenever I've seen that the cycle turns for stocks like Jindal Saw, they tend to be multi-year cycles on the upside for the stock. So I think in the last 3-4 quarters as well, it's trying to restart its cycle. It's not gone through a big performance or a big, monthly or quarterly uptake as compared to its historical, charts. But then I think the stock could show signs of prospects. We are also now in a zone where the indices are consolidating and the mid caps and small caps are, buzzing quite strongly. So on that backdrop, I would assume that, stocks like Jindal Saw and the ones which have good prospective charts, they could, do pretty well. I would suggest to hold on the stock.
Kunal, I'm just going to take a chance. Do you have a view on Jubilant Ingreva? We've got Sumit who's asking whether he should take a fresh position.
Well, I do track the stock, but it's very, very shortlisted. I think, if I'm not wrong, it has a very recent price history, very short-term price history. The last 1 week or 10 days back, the stock had given a phenomenal up move from 300 levels to almost a 420, 450. But from there on, it's become more sideways. If it's specifically towards short-term, because again, as I said, the chart history is limited, so I won't be able to forecast from a longer-term basis. But from a short-term view, I think it's a good time to start accumulating the stock. Whatever the price and the volume patterns I'm spotting on the stock, it indicates that the stock is getting ready for a much more stronger up move on the short term to slightly medium term. But then buy on dips is a better strategy for a stock like Jubilant India.
Next query coming in from Abhishek Kohli. He wants a view on IDFC First Bank for the longer term. He already has 1,000 shares which he's purchased at 51 rupees per share. He wants to know how the new RBI policy will impact this particular bank. Ashish, what's your view on IDFC First Bank?
Well, IDFC First Bank, I would say yes, is a good idea. But do remember that these smaller banks, the risk is more. Smaller private sector banks, the risk is much more than, let's say, compared to an HDFC or even an ICICI Bank or an Axis Bank. But if you're ready to take the chance, see, the trajectory ahead will be very volatile because the NPA problem is there, and despite whatever assurances may happen, I think with this second wave, I think the NPA problem, especially with these smaller banks, would get even more accentuated. So I think be careful. But if you are a long-term investor ready to take some chances and looking for a stock which has some risk but good high potential return over a period of time, then yes, IDFC First Bank is a good idea. RBI move is certainly positive for these banks because they would, the smaller banks would have more target audience, target customers which are benefiting out of the RBI policy. So yes, a positive for these banks. But like I said, I think the near term especially looks very volatile because I think the COVID-2 has got the second wave has got a lot of people by surprise. So the NPA problem would really get very worrisome going forward. So you would have to bear with this kind of reasonably good period of uncertainty and maybe choppiness in the stock. So if you're willing to do that and you're looking at maybe a 3 to 5 year kind of a time frame, then yes, I think this is a very good stock to buy at these levels and maybe average out at every downside, at every dip.
Coming back to you on a very quick view, Ashish, this is the last question that we'll be able to take today. Adil Sheikh has bought Mrs. Bector at IPO, and he's worrying that the stock has been in a bit of a downturn since then. Should he hold on to his investment?
Well, I think now there's no option because you are kind of stuck in this stock. But my limited opinion here is that even at the time of IPO, the stock was very expensive. It just the IPO kind of euphoria got it through. You look at it compared to Britannia, it came at a higher valuation, which does not, according to me, make sense. So I think although the company I understand their products are fairly well accepted in the market, the growth trajectory, everything is good. But you'll have to wait for a very long period of time to really get your return in this. The other option is, if you're willing to do it, is that you book out of here and move into Britannia. I think company far better place and far better and available at a far better valuation than this one. So my limited this opinion would be that either you stay here but you'll have to bear with it for a very long period of time, or better would be to move out of here and go into Britannia.
All right, our next query is coming in from Manav, Godrej Properties. He's purchased that particular counter at 1,360 rupees per share. He wants to know whether he should hold or sell over the shorter term. Kunal, what's your take coming in on Godrej Properties?
Well, you can hold on. The real estate cycle is seems to have turned around for good over the long term, and fortunately, I think for Godrej Properties, that the stock has already gone through that 20% correction. So it's a very I would say a top rated stock or a top quality stock from the high beta space like real estate. And also I think it's available at more than 20% discount from its 2-month, 3-month high. So in that aspect, yes, I think it's a good time to start accumulating stocks like Godrej Properties.
We are out of time on our query segment. Thank you, Kunal, as well as Ashish, for joining us on the show, giving us your take on Alembic as well as Lupin, sharing your high-risk, low-risk ideas, as well as resolving the viewer queries. And all of our viewers, in case we've not resolved your queries today or answered your queries today, please do tune in tomorrow, and we'll try and take most of your queries then as well. On that note, but we slip into a break on this edition of Buy Now Sell Now, but stay tuned more on the other side, so don't go anywhere.